All right, hello everyone. This is Joshua Hayes at BigWaveTrading.com for February 19th stock market wrap up for you to use on February 20th. Let's start out with the New York Stock Exchange, and as you can see, it was another distribution day today with the market down 0.88% with volume higher. That gives it 3 distribution days in the past 7 days and clearly puts its short-term trend in a downtrend. And if I use the October lows right here to now, you can see it's down 6%. So the sub-intermediate term trend is also now slightly down to go along with the down trends in the intermediate and long term. Now let's see what his brother, the S&P 500, did today. Down 1.20% on higher volume. That now gives it 3 distribution days in 7 days. My mouse freezes up while I'm giving this presentation. There will not be a market wrap-up video tonight because I've already had problems with my mouse once today making this video. So it's down 8% sub-intermediate time frame S&P 500. So also downtrend, 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 downtrend on all 4 times frames for the 500 New York Stock Exchange. So why are any of you going long here? I can't figure out why I keep hearing people that we're testing the November lows. How can we be testing the November lows without having any heavier volume rallies off of it? I only have one thing to say for all of you guys that think that we're testing the lows. I want you to look at the volume on your weekly chart and count and look closely off your lows how much you've rallied and how many big red volume bars you see above the 50-day volume average. 1, 2, 3. To how many big tall green ones? 1, 2. And your tall green ones go nowhere while one of the 2 volume surges over the 50-day volume average show a big sell-off. Also on this weekly, I can see since the follow-through, 1 distribution week, 2 distribution weeks, 3 distribution weeks, and at the end of this week, I would assume 4 distribution weeks. So it's not good. So I don't know why any of you are bullish here. There's only one time to become bullish: when we actually fall down or pull back on low volume, and then just like in 2002, which I'm about ready to show you with the S&P 500, going to a Zoom 9 again, going back to 2003, just putting my charts on it by using the plus backslash signs and everything. And here's a daily chart of the 2002 lows. Now, do you notice how in July there was what looked like the November low? And now if the October low is going to hold on, what's going to happen is we're going to see heavier volume on the bounce up. If you don't see these big tall green bars come in off the lows here, and instead after we rally, we roll over instead of rising on heavier volume like we did in November, which then led to another pullback. However, in the pullback in 2003, you can see that it begins on some heavy volume days, but then big tall volume bars show up on the way down. And then in February, you get more big, tall, green volume bars on the way down. And then you get more and more. And then in March, you get another one on the way down with some low volume days. Look at all the down days on below average volume. And then, boom, you have your first up day. Okay, now you can start to look to maybe become bullish. Then you have another big up day on big volume. Now you can look to get bullish. You still, though, shouldn't be getting bullish yet. The next day, little pullback. Not much, though, as it's still up 0.16%. Then the very next day, boom, up 3.54% on higher volume. Now look at the 4 days of volume here on this chart compared to anything from the last big volume 4-day area, which was back on 11/22/02. All the red bars are below the big, tall green bar. And after that, watch what happens during the rally. Another big, tall green bar. A pullback on lower volume, and then we rally in April on tall green volume bars. Then we have a day where the market barely pulls back on big volume. Then another, look, boom, boom, big volume bars. Look at all the big, tall green bars. Do we have that right now? In the S&P 500 New York Stock Exchange, look at the NYSE during that time. See all the big green bars? Now let's go to what we look like now. Do we have those big, tall green bars right now? Then how in the heck could anybody be trying to call a bottom here? It's ridiculous. Wait for a bottom to be put in via higher volume rally days off the lows with leading stocks show up. Another thing that I didn't show you going back there, let's go back there really quick, off the rally, off the lows. Let's take a look at some of the stocks I was long. Cena. Do you see anything that looks like that? Ignore what it looks like in April. Before April, Sohu. Do you see anything that looked like that? Netease. Well, did that show up anywhere? USNA. Where was that one? Oh, it was HILL in this one. Look at Hill. Where's that at? I didn't see that anywhere. Taser starting to set up off the lows. Look at all the volume surge and look at all the green bop. SSYS. Do you see that anywhere? So how can we be getting bullish now? That's the bottom line. Hill was my favorite during this. I mean, that was. Let's go to Zoom 4 so you guys can savor that beauty. That's gorgeous. So I mean, where are these at? Oh, I know. Let me guess. The one long I'm long right now, AIPC. Oh, it doesn't seem to be as pretty as Hill, does it? But the thing is that I just showed you a lot. No, I can show you right now is AIPC. This should tell you something. So don't be calling for a low until you actually see a low and start to on heavy volume, which we don't have here clearly on the NASDAQ. Where's all that heavy volume off the lows that I showed you in the 2002, 2003 bottom? And then where are all those charts that look like Hill? Is there any setting up out there? Let me go and show you the other one that looks good right now setting up. Because you can buy it right now, but you're kind of chasing. Where's all that max green bop that Hill had? Remember Hill? Oh, in case you already forgot, let's go back and teach you the lesson on it. Where are these right now? Do you see that anywhere? Let's go to like right here. Where are these patterns at? Here's where it broke out and we started to go long. And then here's where we really went long. Boom! That's where we loaded up. Look, up 20% and then we loaded up. Oh, Josh! Oh, that's a scary buy. I'm so afraid to buy it. Good. You just helped me make a lot of money. But look at that. Look at how beautiful that is. Do we have anything that looks like that right now? Of course we don't. So until we see that, and look at it now, 45 cents. How sad, man. Very depressing. You know, we just don't have that. The only stocks that we have that look like that, let's pull up NEM. Gold stock, not even close. ABX, gold stock, uptrend, not even close. EGO, uptrend. Not even close. The stock that we just took some profits on that we're still holding for a long, IAG, not even close. How about our gold ETF? Better, but still not even close. The bottom line is this isn't a bottom yet until we're proven that it's a bottom with hot leading stocks that make money, breaking out of beautiful bases like I just showed you with Dot Hill, moving on to new highs on huge volume. Until that shows up, sorry folks, not much we can do. Now, let's go ahead and show you the NASDAQ again, show you how it was down 0.17%. No distribution day because volume was lower. However, on the NASDAQ, I count 1 distribution day, 2 distribution day, 3 distribution days already in the past month. So in the past month, I can already count 1, 2, 3, 4 very clear distribution days. And actually, since the highs in January, you can see the NASDAQ's down 12%, so obviously that's not bullish. And then to go back on the NASDAQ to the October lows to show you if it's even sub-intermediate term down, it is down -4%. So every time frame is down, and the worst off ones are the ones that we like the best, the small caps. The S&P 600 was down 1.25% today. That gives it a 3-day loss of 6.45%, and as you see from the highs in January, it's down almost 20%, 19.99%. Small caps is what we need to lead with leading stocks to be good. But you can see that they look the same as the small caps. It's just not bullish out there. That's why cash is king, being short is queen. I mean, listen to this. Here's some of our short returns. 92%, 58%, 60%, 81%, 72%, 49%, 66%, 78%. So obviously being short's right. Here's one of our best longs right now, up 27%. One of our best longs during the past 8 months was XSI that turned into ANCI. That moved up almost 100% in 3 months. But since then, let's go to oil really quick. I'll show you. Oil had a big up day, up to 38. Like I said, it's going to be in that 30-55 range, I think. But let's look at ANCI. We first bought it here. So this was our first buy. And at the top, it had, with its beautiful max green bop, it was an 86% return. From the clear load up on this one, it's up 40%. And the most that we ever got to the high It wasn't 40%, it was 45%. And that was in 2.5 months. Still, 45% 2.5 months. And then from our initial position to, let's go to our initial position to that high. 93% was the most we got, and we got that in 1, 2, 3 months. 90% in 3 months might sound good to you, but in a bull market, that's horrible to us. That would be like, okay, this stock had a gorgeous chart, but it just didn't super perform. Normally, they're going to do what Hill did, and they're going to move up 600%, or what Epic did and move up 300%, or what Taser did and move up 2,400%. So I hope I've made that clear right now. This is Josh Hayes at BigWaveTrading.com. Aloha.